We are often contacted by prospective clients who say something like this. I'm living in a home currently. I'm moving out of that house and I'm thinking of keeping the home for a rental property. Maybe I'm moving out of the area. Maybe I'm just moving into another house. But should I convert my current house, which is my primary residence, into a rental property? And the answer is not an easy yes or no. So we like to ask 6 questions of you, of that individual, that you want to consider before you convert your primary residence into a rental property. And the first question is this, to ask yourself, if I didn't own this home today, would I buy it as a rental property? Now, this is putting things just right on the table there. Would you buy this property if you had the money in your pocket, this particular property, your principal residence, as a rental property? And the answer, more often than not, is no. Maybe your principal residence does not make the ideal rental property. Maybe the ideal rental property is smaller, different location, doesn't have as many amenities, maybe it has more amenities. But don't just assume because you own your primary principal residence, it would necessarily be a good rental property. If the answer to this question is no, maybe you want to sell your property, and if you still want to buy a rental, buy a separate rental. Question number 2 is this: how much will my net profit be per month? This doesn't mean gross profit. This means net, meaning after expenses. So you need to take your rental income and subtract things like your mortgage payment, but don't forget property taxes, don't forget insurance, don't forget repairs, don't forget HOA dues. You've got to subtract all those things out to see what your net proceeds per month. You're probably also going to have some vacancy on the property. You may also end up paying a property management company to manage that home for you. So make sure you're subtracting those things out to figure out what your net profit is going to be. This is a big one. Can I emotionally detach from the home? We have this conversation with owners all the time when it's their principal residence and they're converting it to a rental property. You need to emotionally detach from the property. And if you can't do that, then do not rent the property out. If you walk into that property that used to be your home, that a tenant is now living in, and if you see that they removed your blinds or they didn't cut your rose bushes the way you used to cut them, and if that bothers you on an emotional level, then you should not be a landlord. You need to detach emotionally because it's no longer your house. It's a rental investment property. So make that emotional detachment from the home. Number 3 is this: what are your long-term plans? If your long-term plans are to move back into the house, then this may be a great option for you. If your long-term plans are to move out of the state and never come back again, maybe you don't want to own this particular piece of real estate. Maybe you do, but just factor that in to what your long-term plans are. And the last question is this, or the second last question: how far away geographically will you be? Are you going to be across the street? Are you going to be across town? Are you going to be across the U.S.? That factors into whether or not you want to keep your house as a rental property. And last is this: what are the tax implications? And this is big. See, the government gives special tax breaks to homeowners that don't necessarily pass through to real estate investors. What that means is you could potentially sell your principal residence tax-free. If you convert it to a rental property and you wait typically 2 years, suddenly those proceeds from the sale are no longer tax-free. I'm not an accountant. You want to talk to your accountant. Go to a good CPA, but get his advice on this as well. If you're thinking about converting your property, your residence, to a rental property, call us up. We'd be happy to have that conversation with you, get you in touch with a good accountant, get you in touch with some tax people, have that conversation, but think long and hard about it before you make that decision.